Welcome everyone, Tom from Park Avenue Trading, your chief dealer, keeping you sane in these insane markets and also teaching you professional trading systems that you can adopt and use for yourself. All right, let's get on it. Let's look at the weekly chart. Just go over what we said in the last video, where we said that the weekly points were really important. And I'm going to go to the week right here. And where's my chart? Sorry. Let me get out of the way here. And what I did with this, I drew a trend line from this pivot low. It actually came up through here. Okay. It wasn't the best trend line because price had intersected it a few times, but then it was quite good, and the break was actually awesome. So the trend line break that went from here up through here basically was fantastic. It was just a straight run down, okay, off of that high. But that's neither here nor there. So let's get on over to, so what I did was, let's fatten this up a little bit. There we go. What I did was I drew a trend line from this demand point all the way out. I should actually be touching this a little bit. But you see this marketplace basically sliced this. That's actually a warning. That is a warning. It hasn't happened yet, but that is a warning, okay? That if this marketplace truly was again, going to really scream up, it should never even pierce that line. And just by that little pierce, for me, is a warning that something's up. So let's go over to the dailies, and I'll show you what I do on the dailies. What I like to do on a daily is, if I started trading today, what I like to do is I like to go back 10 days. Okay. Now you could use any amount that you want. You could use 15 days, 30 days. As long as you stick with whatever the number of days is that you're using, you stick with them. You don't try to optimize. Like if you're looking, oh, if I use 15 days back, instead of normally using 10, it would have worked better. That's called optimization. You don't want to do that. You stick with the number of days that you started with. Okay, so if we're looking at this marketplace on the daily, okay, we had, let's just move this down here. We had support here, even though it's going back, 12 days. If I was going to go to the support within the 10 days, okay, I would move it here. So I'm sticking with 10, okay? Can't fudge. I just told you not to fudge, and then I'm fudging. I can't do that. So here was my support for the 10 days. Here was my resistance for the 10 days. The marketplace broke support, okay? And then it's trading down. So where is it trading down to? It's really trading down to this trend line right now. Now there's a lot of airspace between here and say 181. Okay, right now it's 186, so it's 500 points. But this marketplace has been flying, and there's no problem with it doing something like that over the course of 2 days, 3 days. I mean, it's just been insane, the volatility. So now what do we have here? Well, we got a new level of resistance. Remember, support becomes resistance once it's broken. All right, and this is a level that you'd want to mark down in your journal, like, hey, I got resistance at 189.30, 139.40. Okay, I also have future resistance at 193.64. Okay, where's my support point? Well, really, the daily doesn't do us much good. The support's down here, so we're going to zoom into the smaller time frame, and that's going to give us tighter parameters within the larger parameters. Okay, so whatever chart you use, now obviously if you're trading 10 minutes, you're going to get a lot of points. I'm going to put up a 1 hour chart so we could just look at 1 hour from this demarcation date forward so we could see how the marketplace traded out. Now, I really like to do this with a live market, but since I'm continuing this video on Saturday for tomorrow's release for Sunday, can't do that, and I'm going to be doing these on weekends because during the week I'm doing market updates. So make sure that you check my videos out during the week. Also, if you like what you see here, smash the like button, subscribe, head on over to Park Avenue Trading, get yourself a great technical ebook that actually would help you out with this, because I talk about closes and things like that. So anyway, let's zoom over to the 1 hour chart. Okay, so here's the 1 hour chart. Here's our demarcation day right there. If you notice, we had support originally here on a 1 hour. All right, this was the line that I put that said broke. Okay, so we can't pay attention to that yet because it didn't happen yet. But on the 1 hour, the support came in right here. All right, now I'm going to be discussing with you what's known as a Fibonacci strike. It's not going to be in this video. It's going to be, I don't know if it's going to be the next one. I got to get this information out first, and then we'll talk about the actual Fibonacci strike trade, which is a very simple trade. Okay, it's not that it's complex, but it's a cool trade, and it was one I developed at Casa Torino with the series of guys, and I'll tell you the story about it when we do it. All right, so we had original support here on the 1 hour. We had resistance up here. Okay, let me move myself out of the way. So if you're just looking at the 10 days, we had resistance here. Look at what this marketplace did. It came very close to the resistance. This is a very low risk sell. All right. I mean, now what you're doing, what we're doing with these videos here is we're taking a large time frame, and we're putting a fence around the marketplace. Then we're taking a daily time frame, and we're putting a fence around the marketplace. Okay, and then we could drill down to the 1 hours. Now, over the 10 days, this was the absolute high. Before, if we were working, say, from, say, this point back 10, you know, we could see where the absolute high was, like right there was the absolute high. So I'm not kind of bullshitting. I'm just basically saying, since we're taking this point in time, from this point in time running forward, okay, this would have been beautiful resistance. Nice trade. I mean, if you know, for shits and giggles, you saw 191, you know, you had an opportunity and you're looking for this pivot low right here. All right. You know, you could have scooped back at 190.20. So look, the sale was, say, 190.150 and say 190.50. It's 100 points. It's very low risk, because really, if you had been selling up here, your stop would have been like 192. So maybe 50-point risk for a 100-point gain. And that's what I go for. See, like, I'm not one of these traders that trades for 6 points or 6 pips. I don't do that. I could never do that. If I was in the bank and I was making prices, that'd be fine, because I have you know, Ferrero Candy call me up and go, I need a price on 3 million, you know, Deutschmark. You know, and I go, okay, dollar mark is 10.12 or 10.15, and okay, yours at 10, and the market jumps to 20.25, yours at 20. You know, I just made myself $3,000 like that. You know, and that's not a problem. We could do that all day long with customers coming in, and you knew what they wanted to do. So really, you would really shade the price, and that's, you know, it's not exactly the most ethical thing to do, but if you know they're a seller, they need to buy, you know, Deutschmarks, they need to sell dollars, and you look at the low and you go, the low is like, you know, 140.90, and it's trading at 20.25, you're going to say 141, 141.10, and they go, yours are 141, and they're very happy because they're not hitting a low, and then, you know, it goes up 40 and you sell. And they usually do more than 3 million. They usually do something like 20 million. So you can make a really good amount of money doing that. However, when I got onto the proprietary trading desk, I was not allowed to do that anymore. So I had to develop systems that gave me ideas of where to buy, where to sell, and where to add. So that's what we're talking about here. I shouldn't have went off on that tangent. But anyway, so the marketplace right here basically was your top. Now here we go. Now let's think about this. Same principles that we did on the weeklies, you know, where we said in a rising market, you're going to get higher tops, higher bottoms. And the opposite, you know, when it's coming down, you're going to get lower tops, deeper bottoms. That is a Dow theory that it's the only thing that we know. Okay. Now, does it work out always perfectly? No, it never does. But it's very important to know that law because that really does help a lot. You know, a lot of people always scratching their head, is it going to break? Is it going to break? Well, if the low does break, it's going down. Don't be looking to buy it. Don't be using bullshit RSI or MACD or whatever. Forget it. If a low is gone, it's going. And just like, you know, professional trader trusts what's going on in the marketplace more than an unprofessional trader. Unprofessional trader is always going to second guess what's going on. A professional trader just trades what he sees. You know, Paul Tudor Jones was famous for that. I mean, he would say like, marketplace is moving down. You know, the Dow moved down 150 points in, you know, 15, 20 minutes. Okay? One of his traders on his desk is like going, wow, this might be a really good place to buy it. And he looked at the guy and said, are you fucking mad? Are you fucking mad? I mean, it's down 150 points after like 30 minutes and you want to buy it? He goes, well, you know, where should I buy it? He goes, you shouldn't buy it. You should be looking to sell it. It's going down. Don't be, what are you trying to do? Find this ultimate low? Just go with what the marketplace is going, you know, what the marketplace is saying. Forgive my language. So anyway, we have a high here, slightly lower high than this high. We come down, we get a low. It's higher than this low. It's the first kind of indication. You don't know for sure. You get another high, it's still lower than this. You get a higher low than this. Now we got two in a row. Boom. Marketplace breaks that high, rallies. Okay, it retraces. It's a natural reaction down. Does it go through these pivot lows? No. Gathers, re-steams again, and goes back up. And then the market context changes from here. Okay? But there were several hours when it was only going up, and people, you were selling it, you were early, and you were getting beat up. And I happen to know, because my system gave me a couple of sales that I took that I got hit. You know, I was like, damn. And it happens. I have a system that basically for volatility, and it wasn't working at this point. I said, well, this marketplace is starting to trend up. It's breaking. I was really expecting this break to happen like in this area. It didn't happen. But anyway, okay, I lost some money, you know, but I wasn't, you know, when it gave me the sell signal here, I took it. You know, it gave, you know, my system could be, and it's a system I call Genesis. I trade it. But it could be wrong like 2 times in a row. But on the third time, it's absolutely right. And so I got to go with it. So here's the lesson for today is like we go to the dailies and then we get the daily, we put up the daily time frame, okay, and we're looking for the same thing we looked for on the weeklies. Now, this was the pivot low that we had, the lowest low that we had off of this 10-day series. All right, marketplace broke this, and look what it does. I mean, it makes a lower low. It comes back up. This is your resistance now. Why? Support, once broken, becomes resistance. That's another market law. That's something you have to understand. Now, also, like I think I said it in the last video, it's really important to note that support is support in a bullish marketplace. So if I go here, here's support. Support is support in a bullish marketplace. Resistance is resistance in a bearish marketplace. So I can't use this example because I got to find a bearish marketplace. So like here, this is bearish marketplace. This is resistance. This line is resistance. Resistance is resistance in a bearish marketplace. These are important levels. Easy levels to sell. You got to be patient. Market comes up to that level. You know, there's a saying in trading, you know, when the ducks are quacking, feed them. When the ducks are quacking, feed them. Perfect time to feed the ducks. All right, so I'll leave this video here. I hope I covered what I wanted to cover. But But we're going to go over again. So what we did in this video is we took the weekly. Okay, we drew a trend line across. Okay, then we went down to the dailies 10 days back, and then we basically looked for support and resistance. We zeroed into the 1 hour. You could actually do it on the dailies too, like and zero in on that. Hang on, I got like 5 minutes left. Let's do that. Okay, so let's say, for instance, we started trading this day. We went back 10. 1, 2, 3, 4, 5, 8, 9, 10. So I would say, okay, I could go down to this level here as support. All right. It's like, or actually, right there as support. I had resistance right there. It broke through the resistance. Okay, it traveled up a little bit. And then once it came back, it should have used that on the dailies. It should have. Let's put a line there. Alt H. All right. How come it's not working? It should have used that. If this is truly an upward moving market, it should have used that as support. It didn't. Okay, so basically it was giving you a signal there that, oh man, this is not. It's not a very bid market. It's not a very bullish market. It's actually breaking through what old resistance goes. Resistance is resistance until it's broken and becomes support in a bullish market. So let's go back down to the 1 hour. Okay, so here was that high that was made, the breakout. Here was the breakdown. This was the level that we put up saying, okay, should be the support level, right? I mean, if resistance broke, should be support. Look what this marketplace does. Makes a low, comes right back up. Yours. Sell this shit. You know what I mean? If anything, you could put your stop up here, 193.38. You're selling, well, it's kind of far. It's 192.09. But you have to work that out. I mean, it's maybe 50-point stop you can put on it. It breaks this low. Makes a high. Breaks it low again. Makes nothing. I mean, it's just channeling lower low. Lower low. And then finally breaks. I mean, this was in a bearish marketplace. So by you going weeklies, going dailies, and then zeroing in after a certain number of days of what you want to look at, what pivots you want to look at, we can determine good levels of resistance, support / resistance, and we can make some trades. Now, in the next video, I'm going to be talking about Fibonacci strike, which is a trading system, and I'll go over it with you. It's a really cool trading system. So stay tuned for the next part of how to trade successfully, how to day trade successfully. Taught to you by the one and only Tom Alonji, 30-year veteran in Forex trading. If you like what you see, get on over to Park Avenue Trading, get yourself a free ebook. Don't forget to smash the like button, subscribe. See you in the next video. Cheers. Oh, enjoy the party. Dance near the door. Cheers.